Hey guys, really good day for me. Great day. Love trading today, but I'm gonna talk about a few things today, and one thing I'm gonna talk about is what I always talk about. This first hour, guys, was brutal. It was extremely choppy, pretty choppy. But a tool, I think if you're a newer trader or just say struggling the first half hour, a tool you can use to stay out of this chop. And this is no hindsight anything. This is beforehand. And it's just as simple as I always talk about the tick, guys. If you notice, the tick didn't make any ticks above 600 until the first hour. So if you at 10:30 exactly, so if there's no ticks going on above 600, you can stay out of this mess. And then once the tick go above 600, then you can start, picking and choosing and trade. Now it's a momentum in the market, but that's just a simple tool. There's no hindsight in it. You're seeing it before. There's no ticks above 600, so you can just stay out of the market and wait for that to happen. And that's a great tool. And then today was, like I said, it was a good day for me. And I really don't want to talk about the winners. Those are going to come. I'm going to talk about the losers and how I always think that losers can pretty much give you foresight into what the dominant trend is going to be. So let's start off with the gap. We had a little small gap. I played, I played the gap, like I played a gap fill. I faded it, caught a small winner there. But then when this happened, this was the dominant trend for the beginning. Then I played a pullback in here, and I got a full stop out. But when I got a full stop out, the trend to me reversed. So now I'm looking short at this point. And in the meantime, I'm noticing tick is not going above 600, so I'm being a little cautious here. I was just playing a gap fill, and then this happened, and I didn't take any short trades, even though I had a short bias, and it broke back above my bias line, which is the 61 line there. So now I'm looking long. Okay, so um, as I'm looking long, the market pulls back here. Like I said, this was a winning trade. Don't really want to talk about it. That was a pretty decent trade. I held it for a long time. It was a tough trade to hold, but all in all, that was a good trade. So, and this is where I feel like the market got really interesting. And so now my bias is long, obviously, after this. And this is what I mean. If you're a trend trader, this is very important. When you're a trend trader, you're going to take losses. You're going to take losses as a trader anyway, but if you're a trend trader, you have to play that trend until it breaks. So when this happened, my bias is long. I don't really play levels or anything like that, but let me move this over a little bit. I don't really play levels like that, but if you want to look at this level here, this was resistance, and now it broke down with support, and I played this level here. I got in at 15.5. I got 15.5, and I didn't hit my first target, guys. I actually just took a full stop out. So it was two full stop outs today. That rarely happens, but it happens. Two full stop outs. But look, again, this is where I use my tick tool. Highest tick of the day, highest price of the day. So not only is it the highest price of the day, but if I'm long biased, I keep taking longs because I don't know if this tick is gonna hold. I'm just gonna keep taking longs because I'm trend trading, And I was in the trade, so I really couldn't take that counter trend move. So I was in the long coming up in here, coming up into this level. So I really couldn't take the short. But all in all, I took the long here. Got fully stopped out. Two things: highest tick of the day, highest price of the day here. You can see it, 10:30, around 10:30. But then it broke my bias line. So once it broke my bias line and had the highest tick of the day, that's two things that let me know, okay, trend really reversed, and this is time just to look short. And that's what I mean. Like when you're trading trend, you're gonna get some losses, but losses can lead to knowing the dominant trend. Two things occurred: highest tick, highest price, broke my bias line. At this point, there's no reason for me to look long. So for the rest of the day, I took shorts, and that's what I mean by I don't really want to go into the winners because if you were just shorting into this market all day, you pretty much had a pretty decent day. I had I caught two outlier trades and one, it was a borderline outlier trade. So I had a pretty good day. And like I said, I don't want to really go into the winners, but that principle alone in my trading plan helped me know the dominant bias, and I would just shorten this market all day. Normally I'm done about 3:45. I took a short into the close because it was just shorts were dominating today. Um, but then I got a question on a journal that said, what's a perfect pullback? I'm gonna say this: trading and perfect should never be in the same sentence ever. There's no trading, there's no perfect pullback, there's no perfect trading plan, there's no perfect setup, there's no perfect trading style, there's no perfect trading method. Trading and perfect should never go in the same sentence. If you're just, it just shouldn't, in my opinion. So there's no perfect pullback, but I'll tell you what I look for when I look for a pullback. First and foremost, if I'm trend trading, I'm looking for the bias. Which, if you've been following my journal right now, you know I use Fibonacci for the bias. Like today when it broke this at 11, you know my bias was short, and I never looked back. So, what do I define as a pullback? One, I would define a pullback as, in this low volatility environment, and the VIX being so low today, I think it spiked a little bit, but it being so low, I consider a pullback has to pull back six ticks or above. There's no magic number in the sense of, okay, if it pulls back 8 ticks, I'm going to get long or short. No, I don't really trade that way, but I'm saying in order for me to consider it a pullback, it has to pull back at least 6 ticks. And also, it has to, visually, I can't explain it, but visually you can see a pullback. Like this right here, this is just a market pause. It drop, pause, drop. This, some consider this a pullback, some won't. I feel like it pulled back here, and then once price start making higher highs on previous bars, then I consider that a pullback. And pullback 6 ticks and above, then I'm going to consider that a pullback. Okay, so this is considered a pullback. This is considered a pullback. There's no perfect pullback, but those are considered a pullback. You can visually see it pulling back, like this right here. This level right here is visually, you can see it pulled back. So that's what I consider a pullback. It has nothing to do with perfect pullback. It's what you can visually see as a pullback. And that's why I like looking at charts, because I have a lot of prop firm trader friends that trade futures, and they don't look at charts. They just look at the dome and that's it. But I like to visually see the market pulling back. That's just my personal trading method. It doesn't make it right or wrong, but that's just how I like to see it. So you can see, look, stack higher, high, so, and it pulled back 6 ticks and above. That's what I consider a pullback. So, and what I would suggest you to do if you really want to trade pullbacks, there's all different type of ways to trade them. People I know trading when they break a low of a bar, when it closed below of a bar, all kinds of ways to trade pullbacks. There's no right or wrong way. But what I would do if you really want to trade pullbacks, I will look at pullbacks and I would start to see this pullback did this. This pullback did this. What do these two pullbacks have in common? And you have to study it, because there's something that they have in common that, when the trend continues, that both of these have in common. So you should start to look at that. And then I'm going to give you guys a nugget. Okay? And this is just years and years of me trading and figuring this out. The reason why certain patterns don't work sometime and it look just like the pattern previous, one, every individual trade is that. An individual trade has nothing to do with the previous trade or your future trades. Know that. But two, the reason why some trades look the same and they don't really follow through, this is a nugget, guys, is you have to look at activity. When market's pulling back, look at the activity. It has to be interested parties around levels, and that's what I mean. If the market pulls back and there's no volume and there's no interested parties, then that pullback has a chance of failing. But there's something that pullbacks have in common. So it's up to you to look at those areas. What does this have in common with this? Both of them pulled back and dropped. Pull back and dropped. Pull back and dropped. Pull back and dropped. They all have something in common. And it's up to you to look at what they have in common. Hint, volume. Look at the volume. The volume may tell you activity. That's what you're looking for in trading. Activity. Alright, guys.